All right, so you guys tell me what are things that you guys want to go over? What are things that you guys might need help with? So this is just all Q&A. If something that's not clear, this is where you guys should ask the questions or the concerns you guys might have.
I can start.
Yeah, go for it.
So, I've seen that last week you were very patient with entries and holding the trades,
Right.
and also you actually added when it on the pullbacks. So, wanted to explore your thinking. Like, what did you see
Oh, you mean like
that
I
you?
believe it was Thursday, right? If I'm not mistaken.
Yeah,
Oh yeah,
right,
so
right.
Thursday, where did I take that trade? It was somewhere. I think it was around like 1 o'clock. I think it was somewhere around here. Yeah, yeah, yeah. It was right here. This part. So this is a trade I took. It was from here. It was from this area, and I think I sold it right at this top before. No, this top right before I had the drop, and this was the highest pivot it made. So on Thursday, what I noticed, I missed out literally half the morning, and I'm glad I did because this is this. If you guys understand, these are chops where market
Yeah.
just wants to fluctuate and get people stopped out because it goes up down. It's just chopping range, right? Until it officially makes its first move. Um, so things like this, I had to completely avoid it because I had class. But what I noticed is when you guys see chop, what my best advice is look for SMTs, right? And I feel like we don't cover that much, but one of the biggest things you guys should do is looking for those SMTs. And SMTs are divergence, so it's like when one sector takes a low but the other one doesn't, right? So for example, let's just go to like Thursdays, right? So let's just go for Thursdays, right? So you guys could see the screen, right?
Mhm.
Okay, so let me show you what this is Thursday's chart. This is ES on top and this is NQ in the bottom, right? So in
This is
SMT, sorry, is that a question?
like 70 ticket.
Oh,
Usually like 40, right?
let me mute. Sorry about that, guys. So this SMT, right? Do you guys know what SMT is? Like, I'm sure many of you guys heard that term, right?
Yeah, if you can
Okay, so
just.
I'll re-explain. So SMT is just a diversion where one sector takes like one low with like one instrument. So like let's say ES took this low, which it did right here, right? It's
Mhm.
a 5 minute chart. So on a 5 minute chart, let's say this is the daily low right now, and the next candle wick took that low. But then again, when you look at NQ, since they really follow each other, they should be taking the same exact liquidity, correct? By default. However, the way to spot the SMT is when one instrument doesn't take it and the other instrument does. When you're catching it at the bottom, it's called a bullish SMT. When you're catching it at the top, it's called a bearish SMT. Make sense so far?
Yes.
Okay, so now I like to look for SMTs on the 5 minute chart. I don't like to look for SMTs on the one, two, or three. It's either five or above, right? That's where I like to look for SMT. Five is my sweet spot. I've been noticing I have a very higher success rate on my 5 minute chart, so I stick with 5 minutes no matter what. That's just my thing. Like every trader, as you develop your strategies and your growth, you realize what time frame really works for you. Before I used to love the 1 minute, but now it's like I really that's why I'm able to hold my trades much longer. And you guys seen that I've been in trades for like 2 hours, right? You guys
Yeah.
seen that, right? So it's because I
Yes.
look at 5 minutes and I hold my trades because of that reason. Because you know, like when you look at this candle right here, for example, right? People are gonna be when you look at this on the 1 minute, people are gonna start panicking and being like, "Oh my God, it's about to drop!" Right? All this is gonna drop. But then when you look at the 5 minutes, it's really not even that bad. It just looks like one candle. You know what I mean? It just looks like literally just one candle right here. So what SMT is on this downside is called a bullish SMT. So this right here. So you see how we have this low on ES? It got swept by this bullish candle, correct? When you look here, you see this low that never got taken. You see how the lines are inversing? Do you see that? Should I make it
Mhm.
red so you guys can see better?
Mhm.
Let's
Mhm.
make it red. Okay, let's
It's
do
like a
this.
divergence.
Yeah, so this is a diversion, right? And you have to confirm like did it sweep lows? Where is it at point that is taking this, right? So you guys could also see that there's a bullish order block, right? This is a bullish order block. right? They both have it right here. You see how they both have the bullish order block, right? So they're both bullish order block, except that ES came into the bullish order block, but NQ didn't. That's totally fine. You could use this as a confluence that is tagging to the bullish order block. It's also having a bullish SMT. You already have two confluences, correct? So the one that's diverging is NQ. And the reason why I know that is because NQ's low didn't get taken, but ES did. So that means you should be looking to take a trade based off the NQ sector, right? So what that means is you're looking for a trade. So let's do a replay. So that means on the next candle after this, you should be looking for an entry. So if I go down to the 1 minute, right, we have the diversion here, right? So what I could see from here is that, yes, we're pumping up a little bit, right? But we're also respecting this little gap. It's very rare to see, but if you like, look at this. If you see that, that's a 1 minute bullish fair value gap, right? You see how we're respecting that. So you're having a bunch of confluences already in place, right? So you gotta let this play out a little bit. You want to get the entry as close as possible to this low that you have, the SMT diversion, right? So what you're gonna do is let this play out. Wait, let it go faster. Okay, you see how we tagged? So the reason why I wouldn't enter just because I saw an SMT is because I have that conviction, because I have this bullish gap being respected multiple times, right? So that's number one. I have my confluence already. I have my bullish fair value gap. It's being respected. It's not being disrespected, meaning like no candles are closing below. You see how there's no closure below? So I could see that it's fairly respecting. Even if it does, I know exactly where my stop loss is. So this right here left the bearish gap, and we also coming back and tagging that 1 minute inversion. I'm gonna go ahead and press the buy. Now, the stop loss for an SMT is at the low. So it's at the low. You could even play it safer and put it at the bullish order block, right? But typically it should be at the low of that candle. So that means if we come, we should never come back and tag that. Now, what you're going to target is usually the highs. This is the highs of the 9:30 opening. This is what I would like to target. Not necessarily that it has to come take it, but this is where I would fairly like to, take my trade from. I'm taking the trade based off that it came in, tagged my bullish order block, bullish fair value gap, and didn't close below. It's respecting the SMT, and I'm going to see what ES does with it, right? So let's play this out. Let's also get my long Fibonacci, right? Stop loss right here, and TPs are up here, right? So this is just 2 micros, nothing crazy, no fancy stuff, just 2 micros. We're not risking too much. We're not, we're taking this trade as this. SMTs are usually my A- to B+ setup, so I usually don't like to go that heavy, because I would have loved to take in this trade right off of this inversion, right? Right after that, but there was no bearish gap for it to be a bullish, you know what I mean? So I took it off right off there. So I have my stop loss at the low, my TPs are at the highs, right? And I could of course trail in as I see fit, right? So let's play this out. Let's see how it goes, right? So you see how, do you guys see how the stop loss is at this low, correct? You guys all notice that? Stop loss is at this low, so that means it should not come back and tag that. Now if it does, bro, you're only risking $232. You're not risking nothing, right? Just gonna let this play out. See, trust your conviction, trust yourself, trust that there's a liquidity level, and we could literally look at the 1 minute. Where is orders rejecting? Right here, right? There's this gap right here where orders are all rejecting. Why? And how I know that is because look, this is the bearish gap. We come back up, we tag it once, we push back up, we couldn't even close above, and we had that insane rejection, right? We had that insane rejection, and we came straight back down, and now we're looking for price action to break above that and take this high, right? That's our conviction, right? So let's play this out. Boom. You see how this time we got the closure, right? This time we have the closure. You're up 121 points. At this point, you could decide, hey, I want to sell, I want to take the profit, I'm done, right? You could literally, you could just take that and be satisfied. Whatever you want, but usually I like to hold for my full TP. So let's see if that gets hit. So we came back. Do you guys see how we came back to the same block? Do you guys see that? You see how we came back to the same bearish block, fair value gap, and then we never closed below it again. We already disrespected it already, and now it's this block. right here, this fair value gap is invalid. We don't even need it, but it's good to show you guys, like, look, is continuation of this bullish trend, right? Because you also got to see that there's a market structure shift right here, right? Same exact spot where the fair value gap was, we had the same market structure shift. We closed above. That right there should show you that it's going from bearish, because this is a bearish trend right here, right? Now it's a bullish trend. And look, we literally hit TP, but you know, it's by like one tick. But like if I moved it a little bit down, we pretty much hit TP, right? So this is already 165 points. And now what you could do is you could trail it or just take the entire thing, right? That's up to you. But this is how SMTs work, by the way. Like there's different ways of knowing. I also could tell you guys that this is a doji candle here. Doji candles are reversal candles, right? So when you see doji candles, you should be confident in holding that position, because you should not be scared of taking like that 50-point loss with just 2 micros. That should be fine. Like this is only $231. Worst comes to worst, we break this bullish order block, you could take that short level straight from there, right? That's the worst case scenario. But this is the best case scenario. This is over 165 points delivered, right? So this is how you play SMTs, because the same is true right here. Look at this now. Look how high we went and we took this high, right? Which is this right here. But look, ES didn't take that high. So what happened now? Market just went down, right? Same thing is gonna be true here. Like let's play this out. Let's see what happens. Right? And then look what happened. Right? Because now you could see this way, right? Let's go to the 5. Right? So now we could see this high got taken. But then when you look at here, this high didn't get taken. What does that mean? A bearish SMT, correct? A bearish SMT. That's why you have the market going straight down, right? Same thing is true. NQ went straight down. That's how you play these ranges. You got to look for those highs and lows. When you find the highs and lows, that's where you should be looking for SMTs. But I only look for SMTs only if we have a chop market. I don't look for them just regularly. I look for them like when we zoom out, right? We go back to the 1 minute. This is all chop. We could all agree this is all chop. So when it's all chop, go to the higher time frame and just wait for the SMT to be formed. That's where you should be looking for those reversal, right? SMTs are great for reversals. Does that make sense for everyone?
So AK, usually in the evenings, markets are choppy. So, right?
Right. So
you mean you must be looking at SMTs in the core lifetime then?
You could find
most of the time.
What do you mean? Like SMTs are everywhere, any time of the day. There's no specifics. I'm just talking about SMTs are better off when there's a chop market. Like when you see price action just accumulating for such a long time, you're gonna find the low or the high of that accumulation. See if the other instrument takes it or not. That's step 1. Step 2 is then looking for an inversion fair value gap on the 1 minute. Right? Once you find that inversion or a fair value gap that's being respected multiple times in this case, right? It came in, it's being respected because we already have a structural shift up from here. So momentum is already kicking in. But in order to get this trade after this 5 minute, this is where you should be taking that long position. Your stop loss at this low. That means it should never come back and tag you out. Right? And you're targeting the TP highs, which is a 9:30 opening candle.
Yeah.
Right? So hopefully that makes sense, because this is all SMTs are. Like only it's really beneficial when it's on a chop market. You know what I mean? Does that make sense for everyone, or if there's questions you guys could ask?
Yeah. So, okay, like how you draw this order block, like what is I know you explained last time the fair value gap, like 3 candles,
Right.
what are one
Order blocks are
closing, but
those
now the
5
order
ticks.
block.
Order blocks are I consider, like, everyone uses order blocks a little bit different, and some people actually trade off of order blocks. Like, for example, these wicks on the 5, right? When I look for a low point, this is a low point, right? This right here, look how massive this wick is. This wick is one of the biggest wick out of this entire accumulation zone. All I want to see is if price action could come back and react from that wick. Doesn't mean that it has to take that liquidity. I just want to see kind of come back and respect it. For example, on ES, same thing is true, right? We can see ES with the highest wick. You see that? This right here? This is the highest wick because there's barely any body to it. What that simply means that wick to wick, not body, just a wick to wick, right? And you're just leaving it out there just like this. You just want to see price action come back, tag it, meaning like tag it, and then you're gonna look for some sort of confirmation to get your reversal. This is where the SMT comes in place, right? Because look, ES came back, tagged it, but NQ didn't. However, there was a bullish SMT already on ES, so the same thing is true here. The same factor is true here. Even though it did not touch it, it also did an SMT, right? And ES should give you that strong confluence. I'm sure if I was trading this, I'm sure ES was already pushing up while NQ was still staggering around here. Because I know that the reason why I know that is because this candle first went down right here. It didn't put a body and then it started pushing up. Well, ES was already pushed up. So this already gives me a high confidence that this is going to be a really good trade with the SMT, especially respecting on the ES. So that's how you know when to use an order block. Like there's also an order blocks here, but the larger the wick, the higher probability that price action is going to come back to that level of wick. And you don't use, like I said, this is how you draw it out. You don't use the entire body. You just use from the last bottom to the low of that wick. You see that? Does that make sense?
Yeah.
You guys see that? So you
Mhm.
use that. And the same thing is true here. Look, what happened here? Look, price action came back, tagged it, and look what it did. It instantly pushed right back up. Right? Look at that. It instantly pushed right back up from this order block. This candle wicked it. Yo, look at this. And you could have just taken a trade from here, targeted these highs right here. And what happened? Price action would have just taken it. Because this is also, if you guys understand, this is also equal liquidity. Right? Equal liquidity is when the wicks are all next to each other very closely. That means that there's a lot of generated liquidity. This is me telling you without looking at a book map. If you go on a book map, I 100% could confirm that this was a liquidity sweep, 499. Right? If you open a book map, but the thing is, you don't need a book map to understand liquidities. Right? Book map is great, but it's like it's too extra. Like you don't need to see all these bubble, gamma, this, that. You don't need it. Just read price action, right? Price action is the most way you could become a successful trader. If you know how to read these price actions, you don't need anything else. There's no indicators, nothing else that you need. Just read the price action. Comes down to the order block. You have a lot of liquidities highs. These are highs, right? That are being formed, right? That means price action went up here, came back, tried to take this high, but it didn't. But it formed another high. It's a lower high, but it's very close to one another. So what that means is that I'm going to be looking for some sort of entry to take back the highs, right? And in order to take back the highs, you need to understand that market needs to sweep liquidity. Now, what does that mean, right? This is liquidity. This is a low point liquidity. So what happened when market swept this? Market swept this. You had a bullish order block. The price action came back, tagged it first, and then started skyrocketing. That's your confirmation. Liquidity sweep happened. You have a bullish order block. Price action tagged it. Look for the longs from here, right? You're going to look for the longs from the next candle. Stop loss at this low. And you're going to target back to these highs. And there you go. You're risking 52 points to make 86 points. You just got to hold it through. Right? The reason why I say hold it through is because you have to look at the 5-minute chart. When you guys start looking at the 1-minute chart, all this right here would scare a lot of traders away. My best advice for you, for individuals that want to trade by yourself, look at the higher time frames. Do not. That's why I be in trades for like 2-3 hours. Like, I'm not selling. Like, there's no need to sell. You know what I mean? There's absolutely no reason to sell unless the conviction of a 5-minute chart tells me otherwise, right? Unless I start seeing like a bearish CISD right here, right? If I'm seeing things like that, I'm gonna obviously look for shorts, and I could probably get away with taking a short right here, right? Get away with it, target these internal liquidities, and I should be out of here, right? Now, what that means is you guys should be looking for where is liquidity. Liquidities are just highs and lows, right? Damn, this Thursday was so great. Wow, so many great trades. You guys you guys see the PO3 here too? You guys see this? Accumulation, manipulation, bullish CIZ, straight run. So I'll go into this one as well. There's so many great trades in here. Wow, damn, man, I missed out a lot on Thursday. Did anyone catch these trades, yo? I think Ryzen gave a couple good. These are great trades. Holy shit. Damn, Thursday would have been a feast. Okay, this is nice. Does that make sense,
So,
Jay? With the
yeah,
order
yeah,
block?
that makes sense. So one more question, like, so the PO3 strategy is different from this strategy,
Yeah,
right?
yeah.
So
Well,
when you,
I could combine them. but that's more
Okay.
like you're gonna have to understand each strategy by itself before you could combine them. Like I've gotten to a point where I could combine the strategies and it will make sense to my conviction. So if you understand each one at like at a pace, like let's just say you're focusing right now on the PO3, you're gonna see PO3 a lot more often, right? Your brain is gonna start wiring it and you're gonna be able to see that, right? So once you master one, then you could go to the next, then you could do the next. The other stuff that I teach are all confluences that you could add to a PO3, and I'm gonna show you exactly how that works, right? All the stuff that we just learned about order block, liquidity sweep, inversion, you could tie all that into a PO3, and I'm gonna show you guys exactly that right now, right? So let's look at this. Let's look at this right here. So this, right? So this right here is a nice accumulation zone, right? This is perfect. Price action is just accumulating. We could all agree this is accumulation, even on a 5-minute time frame, correct? Everyone's agreeing with me on that?
Yes,
Okay,
yes,
so
yes.
this is accumulation zone 100%. Either either one of two direction could happen. Market could accumulate, manipulate up and then drop. That's scenario 1, right? Scenario 2 is price action accumulates, manipulates down and then pushes up. That's the best case scenario for number 2, right? So you have two options that could happen. You just don't know what's going to happen. You have to wait and see. This is why I tell every trader, please do not take trades when its price action is accumulating. This is how you get destroyed. This is how your accounts pretty much get destroyed, right? As time progresses, you guys will understand why I'm saying that, because accumulation is not a spot you want to be in. Like, look at this. This is a 5-minute chart. If price action is like this, I could already imagine 1 minute is just ugly. Look at this. What the hell is this even? Right? This is just ugly. Like, it just doesn't make sense. So what that means is two things, right? So if price action accumulates, either it could take the liquidity, meaning it could take this high, right? Or it could take this low. And I know that's because this I target specifically this low instead of this low. The reason why I say that is because this low is right before that pump up. So if price wants to come back, grab some liquidity. It could take maybe even both of them, but these are pretty much essentially my targets that I would want to see price action come back and then take it from there, right? So I could just mark out both of these if I really wanted to, right? So I have two spots. So either price action is gonna go straight up, take this and then drop, or price action is gonna take these two and then go up, or it could just take one and then push right back up. So I have those two case scenario, right? Does that make sense so far with PO3?
Yes.
Yeah, I think there is also
Yes.
that is also a fair value graph.
Right,
Fair
right,
value,
right, right,
right?
exactly.
That the three candles
Right, exactly.
blocks.
But the point I want you guys to understand is these are liquidities. These wicks are liquidities. Does that make sense? This is equal liquidity. Look how close they are to each other.
Mm-hmm.
You see
Yeah.
that? They're so close. So that's equal liquidity. So I have a higher conviction that it might push down because of that equal liquidity and then push back up. And then we could even target this high. So let's let the market play out. Okay, so you guys could already see, look, we're already slowly breaking out. Right? You guys see that? Look, we're already breaking out of that gap. That, I'm sorry, not gap, the accumulation. We're already breaking out, right? So let's just see what happens on this. Okay, right here. You see how it did not take the entire liquidity? It didn't even need to, right? But do you see why? Let me show you guys something. Do you guys see how there's a bullish CISD? After how many down candles did we have a bullish CISD? 1, 2, 3, 4, 5, 6, 7, 8, 9. After 9 candles, we finally have one green candle up, and that one green candle is a 5-minute bullish CISD. All CISD means is change in state of delivery. All that simply means that it went from a bearish model, now it's going to be a bullish model. Stop loss needs to be at the low of that bullish CISD, and you take it back to what? The accumulation zone high. Accumulation zone high is simply right here. That's the accumulation zone high. We can all agree? Yes? Does that make sense?
Yes. Yes.
Right?
Yes.
So remember, it doesn't have to take the liquidity. Don't think that has to take it. It doesn't have to take it. The minute you see the reversal, which is CISD, is 100. It's more than 100%. My guys know that I've been doing PO3 with me. More than know that a reversal candle is called a bullish CISD. That's how we find a reversal, right? All CISD means when the last downward candle and the next upward candle is bigger than the last downward candle, right? So you see how this body is above, right?
Like engulfing.
Right, it's engulfing, exactly. It's engulfing that last previous candle. What I'm looking for now is usually a PO3 I like to go in pretty heavy, you know what I mean? But like, for the sake of this, I'll show you guys risk management. But when I see PO3s, I size up because I trust my model enough where it shouldn't. That's why on the London trade session that you guys seen the other night, I was in that trade for 3 hours because it was a PO3 and I did not sell till I hit that liquidity point. And I knew exactly what that PO3 was. That's why I do not sell PO3s right away, because what nature of PO3s, that it will pull up, it has a little bit downside and then it goes right back up again. And that's where a lot of traders don't have that psychology to hold the trade. So I'm gonna show you guys right now, right? So I'm taking 5 contracts. My stop loss should be at this low, and what I'm targeting is back to these highs, right? So I should be targeting that. It shouldn't come back and hit this, but if it does, that's the worst case scenario, right? It's like literally 30 points. That's the worst case scenario. So let's let this trade play out. So you guys see what I mean when I say traders would get faked out from here. This candle is on a 5 minute. Remember, we're on a 5 minute. If this was a 1 minute, this is showing that it's going down. So this is where traders are like, nah, I don't want to be in this trade. It might, FY, whatever it does. You know what I mean? So remember, this all this liquidity is here. Doesn't mean that it needs to go and hit those liquidities. You could start trailing as you see fit, right? So as liquidity, you see how we have these downtrends, but we're not selling yet. So you could just keep letting it ride. So you guys see how close. You guys see how this trade is a mental game. In terms of when it comes to PO3, you need to be able to have your conviction. It's either stop loss or TP, right? Yeah, there's no point of cutting the trade because like if you understand liquidity, look, it came back and attacked the highest liquidity, right? It's not like it didn't. It came in and hit 439, and I had 439.25, so it hit 439 right on the dot. You guys get what I'm saying? So this is how you understand PO3. Like, just because it has a little pullback, did it come and hit your stop loss? No. So just let the trade ride out. After you see the dip, and is essentially like when you see the official dip, all you gotta do is bring your stop loss to break even and let this trade ride out. Now this is a beautiful, simple, easy A+ PO3. I would have 100% done like 20 micros on this kind of trade. That's the kind of trader I am when it comes to PO3. I like to take higher risk size because when I see the PO3, it's telling me exactly where it wants to go, you know. So it's not hiding anything. There's nothing else for you to be saying, like, there's nothing else to be doubting this trade. This trade is an A+ setup. Accumulation, manipulation. We have the fair value gap here being right here. We have this fair value gap, right? We have the fair value gap. We have a bullish CIZ right on this candle. We have a bullish CIZ inside a bullish fair value gap, high conviction trade. Stop loss is literally at this low. So 27 points. You're risking 27 points to potentially make over a 100-point trade. You could have easily, instead of targeting the high of that accumulation box, you could also target the lows, right? You could also even just target right here. And you'd still been hitting TPs. And that's totally fine. That's totally fine to hit and sell here. You don't need that extra. If you want to, you can. But if you want to just sell at the lowest of the accumulation zone, you can right here. And just take your TPs and you're done. Simple as that.
This is amazing.
Does that make sense of how the PO3 works?
Yes, makes sense to me.
All right, so
Yeah.
that's how you look for PO3s, right? Accumulation, manipulation, and distribution. It's called the AMD model. PO3 model is the same thing. And yeah, that's pretty much how you play it. Higher time frames will tell you a better story. Like this is all chop, right? This is exactly all chop. You know what I mean? Like this right here is also a nice PO3, and you guys could see it's the same thing. Accumulation, we have this order block right here, right? Price action came into this order block. Take the longs from here. Stop loss that's low. Target the internal high. So if I take TP here, stop loss at this low, I'm targeting this internal high. Bang, right there. You guys see that? Accumulation, manipulation, took liquidities, took all these liquidities, but we're still respecting the order block here. Take that long, right off the candle, right? Target the internal highs at these. Boom, should be hitting right before the drop. That's it. It looks easier now because we're doing it on TV and it's already played out. But like the real skill comes in when you're actually trading. So when you're actually trading and you see it, you can't be scared. You just got to take it. Like I tell people, when you see a PO3, don't even hesitate. Just take it. Maybe start off with 2 contracts. Because what if this kept continue dipping, right? It kept taking these liquidities, and I already got into a position. If I got into that position already, I'm gonna start off maybe with 2, 3, and then worst comes to worst, I come in here and I add 2 more contracts. But now if it goes further down than this level right here, this gap, then I'm not in that trade. I'm gonna exit my position, and hopefully that after it sweeps more liquidity, I could find a reversal pattern, right? So this is a high probability A plus setup. This is also an A plus setup. Both are great, but they just look different. Their accumulation zones are very different than another. This is a straight line accumulation. This is like a straight up, but it's still accumulating in this range. It's not breaking out. And when it broke out, later down the road, you guys will see how we could play manipulation levels. So you guys see this is where the neckline model that I came up with. So when neckline model breaks, it means where is support in this accumulation zone right here, right? And you see how it finally broke out? You guys see how when you have this neckline model, it broke out from here? All you're doing is taking a short. You take the short from here, stop loss at this accumulation low, and you would want to target here, right? You would want to target essentially here. But before that, I'm sure it gave you guys plenty of points. So when you know it's manipulation, you should take whatever you can right away and then look for the reversal entries. So that's more like an advanced trade. As you guys keep learning these mentorship with me, you guys will see what I'm talking about. This is also called the neckline model. So the PO3 essentially gives you the distribution trade, and it also gives you the manipulation trade. The manipulation trade is identified by using the neckline model, because now let's say that it broke the upside right here, right? And it pushed up. I know it's going to be targeting around close to here. So I'm looking to take my profits around this area. Same thing is true. If I know this is the liquidity, I'm looking to take profits around this area. Even if I take 5 and I'm at 52 points, I'm going to take it. No need to hold for longer, because I know I'm playing manipulation. I don't need to be in that trade for that long, right? So those are other ways that you could get more trades with PO3. You get the manipulation trade, and then you get the actual trade, right? But this is more like an advanced version as we progress. And yeah, that's pretty much how the PO3 works. You guys have any more questions? Happy to answer.
I think going forward, I'll be looking more into this.
I'm gonna upload this on YouTube so you guys could rewatch it again and again. Cause you need to act like once you drill this PO3 down your head, bro. Like trust me, it becomes so much easier. Like when you spot them yourself, you're gonna be like, bro, I'm not even hesitating. I'm taking that trade. You just gotta trust yourself. Look, the best thing I could tell anyone is it's either stop loss or your TP is gonna get hit, right? Don't just be stuck in between. Just let the trade out. Don't be scared. There's nothing to be scared about, because you're gonna do the same thing again the next day again. So it's not like did we do anything different from the last mentorship till now? No, I'm teaching you guys the same basic fundamentals again. If you don't understand the fundamentals, you're not gonna be able to understand these type of trades. You have to go back to the basics. Understand liquidity. Look at candlestick patterns. You know what I mean? So I'm gonna upload this entire thing, and from the last week, I'm gonna upload these on YouTube. And you guys could just keep rewatching these models. Once you keep watching and watching it, I have more videos already uploaded on my YouTube channel. The more you guys see these type of patterns, the more easier trading gets. And I'm sure if you know Arcus, if you know Spart, they've been with me on this with the PO3 model from like literally from day one. Bill, Dark Angel, like they know this model inside and out. So when they see it, they're able to take those trades without me having to even say anything. They even tell me, yo, there's a PO3, and I look at it and I'm like, shit, there's a PO3, I'm about to take that too. You know what I mean? But you guys will learn this as you keep progressing and doing these mentorship every weekend, right? As you keep watching these videos, you got to put in the effort. You got to put in the time to, learn these models. It's not like, oh yeah, just because AK said it, but like, it's just a PO3. But no, you got to really understand, why is that a PO3? Ask yourself why. You could literally, I tell everyone every day, go back to TradingView. They have that replay button. What's the worst case if you get stopped out? It's not even real money here, right? Just practice here, because then when you go to the real life world with the actual trading, when the stock market opens, you want to be able to know that, yo, you're comfortably already taking the trades. I used to paper trade maybe for like every weekend. I used to backtest PO3 since that shit drilled to my head. So now it's like when I see I'm already taking these type of trades. I don't even think twice. I'm already in. Worst case, stop loss, I'm out. You know what I mean? So these type of things I'm telling you guys because you guys gotta go and put in the effort. You gotta put in the effort, put in the time. PO3 is great for higher time frames. Lower time frames also has, but lower time frames are meant for scalps. When you do it for the higher time frames, like the 5 minute, which I recommend, that's my sweet spot. So if the 5 minute shows me a PO3, I am not selling a position until that shit hits my liquidity level, like guaranteed, right? That's where I preserve it to be. Like I assume it should be hitting my liquidity, but like I said, market doesn't owe me anything. I just gotta have proper risk management. If it hits, it hits. If it doesn't, worst case, my stop loss, and I put stop loss at break even or middle of at least some sort of profit, right? You gotta be okay with it. Because why? There's more trades. There's gonna be plenty of trades. There's just like we found like 3 trades in this PO3 model. We found, I'm sorry, 2 trades. The neckline model, then we found the reversal PO3 model, and then we caught the order block right here with another long. And then when New York opened, we caught there's that SMT diversion that I was talking about, right? There's plenty of trades. Don't think just because you miss one, you're not gonna find another one, right? There's plenty of trades that come in. And yeah, that's pretty much it. Just look back at these videos, understand these time frames, right? Find out which time frame is your sweet spot, right? Every trader, as you guys go and progress through your trading career, like you're gonna find out which time frame is best and ideal for you. Like, you know, for me, throughout trading, before it used to be like the 3 minute. Now I officially just love my 5 minute. So every time I trade, even on live with you guys, this is exactly how my chart is. Like I have NQ and ES side by side just like this, and I'm looking at the 5 minute. Because if the 5 minute looks like it's chopping, I already know what the 1 minute is doing, and I know that's when people are blowing their accounts, right? So yeah, some people, bro, I've been trading also the 1 hour. Like when I'm in a position and I look at the 1 hour and it looks great, bro, I'm in that. I've been doing 1 hour as well too. But 5 minute, man, it's a beauty. It's like that sweet spot, you know. You hit that and it's out of here, man.
I also like 2 minutes, 5 minutes, and 15.
Well, what I would say is find out which one's your favorite and stick to that, because
Yeah.
because what that means is that let's just say 2 minutes your favorite one, right? If you like the 2 minute, you should be looking for your setups with the PO3. Like if this is on a 2 minute, you should be looking. This is a 2 minute right here. You should be looking. Look, you could identify accumulation right here, right? You see that? Then you're looking for the distribution. You gotta wait for this manipulation to play out. Sometimes you just gotta wait. You know when the market's tanking, people be like, "Oh, market's tanking," but it's not really tanking. It's just getting people stopped out. People that are trying to long are getting stopped out each time. But then look what market does. Then when somebody gets to this point, they're like, "Shit, okay, bet I'm gonna try to short it again." Bro, they're gonna get stopped out so fast they don't even realize. You know what I mean? So you gotta really, really understand. Like, let the market play out. You're gonna find your entry one way or another. Just let it play out. This is 2 minute. Let me see 15. Yeah, 15 minutes. Look at this. 15 minutes. Beautiful. Look at that. Nice accumulation. Nice manipulation. Right? Bullish CIZ even on the 15. I'm taking that long right there, man. And boom, right there. Look at that. Target the highs. Bro, you're done. You know what I mean? So there's multiple ways, many ways of trading this. And a lot of people are going to be thinking, oh my God, it's going to keep dropping there. And then this is exactly why they get stopped out. That's exactly why. And this is how you play. This is called smart money concept. So this is where retail traders get stuck, and this is where real retail traders that know how to trade won't get stuck. They'll play with the institution and the institutional volumes that are in here. That's how you differentiate between the PO3. This is all manipulation, right? If you have the gut to do it, you could always play manipulation as well too, but that takes more advanced knowledge to do it. Best advice, play that distribution, the reversal. 80% of traders that win, they play against the retail traders as well. And that's what all your guys' objectives should be. You guys should be playing against retail traders, not with retail traders. All retail traders are thinking is short. But you got to be a little different. You got to be like, okay, well, what model is this? Where is it going to? What liquidity level? That's how you got to think. And be like, okay, I'm going to catch reversal. Because if everybody's thinking it's short, there has to be some sort of reversal method that's going to come in. You got to see what pattern it is. You know what I mean? So, yeah. That's pretty much it, you know? Yeah, it's what Spart said. It's the balance of not over trading and seeing setups. Yep, that's exactly it is. Because this 5 minute right here is just like, you know, this is where people just buy, sell, buy, sell, buy, sell, and then they're just getting destroyed. You know what I mean? Would you take the retest after it broke the accumulation? I would have like for me, bro. I would have taken the short. I would have taken the short right here, man. Like this 5 minutes, this was the easy short. I would have 100% taken the short. I would have scalped this right away. I would have scalped this right away. Like I wouldn't even hesitate. I would have taken the short, scalped it, at least to these lows. I would have scalped it, and then boom, I would look for like some sort of reversal. And then, yeah, and then I would just hold that long. Like I would have probably entered around here, and I would have probably put my stop loss like down here, and then I would have targeted these highs, and I would have sold probably around here somewhere. And yeah, that's how you catch the PO3s, you know.